Hi, all CS professional students. Today I'm coming with a very important lecture which is about corporate funding. Now remember, the regulations that I'm going to discuss are so important that it is not only important in corporate funding but in your entire CS professional or any student for that matter. Okay, for going for any exams. Now before I start into the lecture, which is not only about amendments but it is also the most important topics which I have curated. Now remember, I have made something called as a dream batch where I have already free test series, revision lectures and exam tips. Okay, so go ahead, like the video, subscribe it if you're new to the channel, and don't forget to share it with your friends who will also benefit from this lecture. Now, first, I have prepared a detailed revision schedule for CS professional students giving their exams in June 2023. Now, it goes almost every day. We are coming up in the evening around 8:30 to 10 p.m. talking about the amendments and the important topics. Today, we are going to cover about corporate funding. The entire schedule has already been given and posted to all of y'all. You all can just go through the past video where I've covered the revision schedule for CS executive and CS professional students. Now, this is the entire schedule. Obviously, there would be some links shared in our WhatsApp group, which is exclusive for CS professional students. Go ahead and join our Telegram group as well. And don't forget to share it with your friends. If you want, you can scan this code directly. Okay, now share it with friends because it's going to be very, very helpful. I've gone through all the past exam questions, all the guidelines and the supplement sheets. And today you will see a very important lecture and a very lecture which is important from exam point of view, and I've simplified it in a short span. Now, without further ado, let's start with the amendments. Now, the amendments, I have bottled it down in this lecture into three important parts. First is the ICDR regulations 2018. Now remember, I have already created a playlist on YouTube which is free for the entire ICDR regulations. I know it is chapter 1 and the most difficult, or the most students find it the most difficult. Watch that video which I have covered the entire ICDR regulation in a short span. My guarantee you will find it very simple. Okay, or just put ICDR regulations 2018, my lecture will pop up in the short span. In ICDR regulations, they have brought in an amendment and introduced a chapter called as chapter 10A, called as the social stock exchange. According to me, this is very important from exam point of view and it is likely that they will ask a question on this particular regulation. Now, I will cover this particular part in detail for today's session. The second important amendment is with respect to the very, very important, listen to me clearly, stop whatever you are doing. The second most important amendment is your SEBI issue and listing of non-convertible securities regulations 2021. Now many students have a doubt whether this regulation is applicable or not applicable in the June attempt. Let me tell you, it is very much applicable and the earlier regulations are all repealed. So this has replaced two things in your particular module, that is your chapter 11, non-convertible redeemable preference shares, and your debt listing segment, okay, which was there in chapter 6, and instead of that this new regulation is there. Now how do I say that this is applicable in June 23 exams, in your exams? In the December, this is your December, now pay attention to what I'm saying clearly, in your December 2022 guideline answers, when they asked a question on non-convertible redeemable preference shares, the guideline answers spoke about 2021 regulation, non-convertible security. So if you are studying the non-convertible redeemable preference shares of the earlier, skip that. Listen to this particular regulation and my lecture. I have covered all of it. So remember, even in your December 2022 exam, the guideline answers covers these regulations. That means obviously in June 2023 it is applicable. Okay, so make a note of that. This regulation is applicable, and the good thing is I am going to cover this entire regulation in a simplified manner and covering all the topics that will come into your exam. That is my guarantee, because the full regulation I have summarized. Okay, the issue and listing of non-convertible securities. In short, I will tell you what is this regulations. This regulation I am going to do tomorrow at 8:30. Watch the entire schedule. This entire regulation I will be doing. Short span, simplified, exam oriented. Everything will be covered and you will be a master of it. Let me tell you in short before I switch to the main part. Now, SEBI has notified this new regulation, that is a non-convertible securities regulation 2021. It is the merger of two regulations. This was there in your chapter 6 of your corporate funding book, and this was in your chapter number 11, the non-convertible redeemable preference shares. Today, both these regulations stand repealed. Even the debt securities regulation is repealed, and even the non-convertible redeemable preference shares regulation is repealed. And in turn, we have the non-convertible securities regulations 2021. So if I bring forward, how does it look? The debt regulations 2008 and the non-convertible redeemable preference shares regulations both have been repealed, and in that we have the new regulations in our examination. I'm going to cover this entire regulations not today, tomorrow. So stay tuned for that as well. Okay. Now remember, just a small rationale of this regulation. Why was it repealed and what was the logic behind repealing this particular regulation? Now, if you go to see, it talks about non-convertible securities. Can you all put in the chat box that can they be converted into equity shares? Obviously, any securities which can be converted into equity shares is a convertible security. So this regulation will not apply to it. This regulation will only apply to securities that cannot be converted into equity shares. That is non-convertible securities. Okay, now why did they merge the two regulations? If you go to see both these regulations, that is your debt securities and your non-convertible redeemable preference shares, that is these are non-convertible. So both of them were non-convertible securities. So having two separate regulations covering the same kind of securities. No doubt these were about debt and this was about preference, but both of them were non-convertible. So SEBI thought to merge these two regulations. SEBI thought, let's merge these two regulations because each of them were non-convertible, but we had separate circulars, separate guidelines, separate notifications for each of them. So with merging them, it has reduced the multiplicity of laws and has merged these two regulations and brought in a uniformity and a kind of a relaxation from multiple circulars, guidelines and regulations. I hope you got a brief understanding of these particular regulations. Not only that, this regulation is very, very important from company secretary's point of view. Now, why is that? As per the new regulations and regulation number 27 sub-regulation 4, for the first time they have given company secretaries a special recognition in these regulations, where regulation 27.4 says that ensures that the draft offer letter clearly specifies the name of the compliance officer who shall be a company secretary. What does it say? The regulation number 27, that the letter of offer or the draft letter for listing, whichever is made, you have to mention who is your compliance officer, and that compliance officer has to be a company secretary. So this regulation in depth I will be covering tomorrow. Okay. Now this is the first major amendment that you should know, that is your non-convertible redeemable, your non-convertible securities regulations, to be covered tomorrow. Now the next another regulation that you should know is another regulation which repeals two things: the sweat equity regulations. There was another regulation called as sweat equity regulations, and another one was share based employee benefits. Both these regulations have now been repealed, and a new regulation called as SEBI share based employee benefits and sweat equity regulations. Again, same concept. Instead of having multiple laws for the same kind of object, that is employee benefits, why have two separate regulations? So law thought to merge these as well. So both this have been merged, and now we have the SEBI share based employee benefits. I have put up a lecture on YouTube, and I have also made a separate playlist for CS Professional Marathon lectures where this entire regulation with the amendments are put up, and I have summarized in a short span. So you can go ahead, do these two major amendments, that is your share based employee benefits, ICDR regulations from that playlist. Today, what is in addition to that ICDR is I'm going to take up, and tomorrow will be the regulations where I'm covering the non-convertible securities regulations 2021 in a very simple way. So without further ado, let's start with today's topic and today's amendment and today's most important part. That is your stock exchange, your chapter 10. So let's start. The SEBI ICDR regulations has brought in an amendment. With the amendment in 2023, they have brought in something called as the social stock exchange, your chapter 10A. Now let's understand first what is a social stock exchange and what is the purpose of getting a social stock exchange in India. Now if you go to see many NGOs, let's talk about the object or the rationale or the purpose for introducing this. Now what happened, many NGOs such as CRY, such as Being Human, or we can see Keto, Milap, these are many NGOs. These NGOs, from where they will get the funding? So imagine a fundraising methods of these NGOs usually used to be through crowdfunding platforms. And these used to go ungoverned. And you will be shocked to know that these social organizations, these non-profit organizations, non-governmental organizations used to raise funds running in crores. And imagine SEBI started saying that why not two things: start to regulate this, and second, also give these NGOs an option. Why don't you raise it from the masses? Why don't you get listed and raise money? So keeping that in mind, SEBI has introduced a different segment in the stock exchange. That is, as we have the main board, that is NSE BSE, we also have the subordinate board called as the small and medium enterprise exchange. We will also have one more segment in the stock market, which is called as your social stock exchange, where socially driven companies will be listed and they will be able to raise funds. Now the question is, if I, or maybe let's say if someone wants to give charity, let's say there is an organization, a mutual fund that wants to give charity, a company wants to give a charity. Now when they want to give this charity, obviously they are not investing, they are giving the funds with no hope and no return of getting it. So how they will get it? So these NGOs will typically issue a kind of an instrument which is called as zero coupon, zero principal bond. That means they won't get any interest, neither on maturity they will get any principal. So it is they will get absolutely nothing, the investors. They are investing for a social cause. Okay, so this is the objective. We will see how SEBI has governed these kind of institutions. Now these social NGOs would normally typically raise the funds for what? Can you tell me? Why would an NGO want to raise money in crores? This could be to cover medical cost. If you go to see in India, there are many people living below the poverty line. If they have any medical expenses, that can be funded. If they have any health issues, so the health sector, the education sector, where we can have provisions for healthcare, we can have provisions for rural development. So here this entire regulation number 10A has given all those who can get listed, who can raise, who cannot raise, where it can be used, everything has been provided. Now, SEBI, by its notification dated July 25th July, amended the ICDR regulation and introduced Chapter 10A. Now, the Chapter 10A deals with the concept of social stock exchanges, where socially driven companies will get listed and raise funds. Now, this is meant exclusively for companies who have a social intent, who have an intent to help the society. And these regulations also say that once the funding has been raised, once the money has been raised, a social impact assessment will be done. That means where the money was given, what was the benefits to the society, an entire impact of the activities of the organization will have to be shown. Overall, the Chapter 10A of the ICDR Regulations 2018 is to promote the growth of social enterprises. Obviously, now NGOs will look forward to listing on these stock exchanges, on this segment, social stock exchanges, and it provides them a dedicated platform for raising capital and enhancing their visibility. If you see, there was no brand recall for raising funds for these NGOs, and today we have a social stock exchange where NGOs can get listed and raise funds. So if I talk about what are these, in short, what are these social stock exchanges or HSE? So these are listing of non-profit organizations on the stock exchange and help them from alternative fundraising structure. Normally they would go privately, they would try to raise, or they would try to raise from these particular crowdfunding platforms. Now they can actually go and raise from NSE and BSE segment, which is a so the social stock exchange. NSE will also have a social stock exchange, BSE will also have a social stock exchange, and any company, NGO, can get listed there. But the interesting thing is, a non-profit organization would get listed. But what if there is a profit-making enterprise which has a social intent? Let's talk about Tata's. Tata's is a profit-making organization which also has a massive CSR, has a massive social impact, has a massive social benefit input. So even they can, for them also they can opt here, but for them there is a different route we will see in the regulations, where a non-profit organization, a profit organization, can also get themselves recognized as a social institution and get some benefits here. But these regulations are primarily for NGOs who are getting listed on the social stock exchanges. Okay. Now, why has India come out with this? Very simple. Countries like UK, Canada, Brazil already have social enterprise stock exchanges. Okay. The fundraising, as I told you, the instrument through which they will raise fund is a zero coupon, zero principal bonds. Let's see further. Who can list on SSE? Now, who can list on the social stock exchanges? So, a not-for-profit organization with a social intent will be able to participate here. Who can list? So the activities. So a list of activities have been given. Only a summary has been given here. There are over 17 or around 17 activities which have been recognized as which can be considered to be socially beneficial. For example, a NGO or any institution working towards benefit of eradication of hunger, for education, for elevating, that is removing poverty, all of them can come. There is a separate list given that if you do these activities, you can be considered to be a social organization who can then get listed on this platform. So such as eradicating hunger, improving the healthcare, education, employability, livelihoods, promoting gender equality, even for the LGBT community. Okay, because these are those marginalized communities, there can be dedicated NGOs to help them out as well. And supporting incubators for social enterprises, rural development, rural entrepreneurs, funding them, even that would come here. Now remember, the retail investors like you and me cannot invest on the social stock exchanges. So we can't be investors here. It is only the institutional and non-institutional investors that can invest in securities issued by the social stock exchange. Now what does it mean? Let me tell you. The institutional mutual funds, the QIBs and the non-institutional investors, okay, like maybe corporates who are not QIBs. So basically an artificial person can invest in securities of this organization. You and me cannot buy and invest in these particular things. Why? Because they have given you multiples of 20 lakhs. We will see a minimum investment. So this is mainly to target institutions as investors. So corporates will get listed on this stock exchange and raise from institutions, mutual funds, any corporates that want to fund for social ventures. Retail investors, if they want to invest, they can only invest in securities offered for profit social enterprises under the main board. So remember, if there is a profit making company and there is a not for profit company, the profit making company cannot be listed on the social stock exchange. They cannot be listed on the social stock exchange. They can get recognized that yes, we are something, we are doing social activities, etc. They can do that. It is only the non-profit companies which can get listed and raise funds. So this will get listed and then raise funds from the institutional investors. Profit making companies can also raise funds, but not under chapter 10A and under these regulations. They will go under the main board, that is your NSE, BSE actually. And we have something called as Innovators Growth Platform. We have some kind of AIF. You remember AIF is alternate investment funds, where AIF can invest. There can be investment for social ventures. They can go in that category. The social stock exchanges is meant primarily for non-profit organization who are planning to raise funds from institutional and non-institutional investors, not retail investors. Now let's see certain definitions. You can read through the definitions. I will just highlight a few. Firstly, what is it? What do you mean by a profit social enterprise? Now imagine a company like Tata's, which has social activities, social welfare activities, but is a profit making company. So under these regulations, they can get recognized and certification and a kind of certificate that yes, we are doing those activities for social welfare. That is there, means a company which is operating for profit, which is a social enterprise for the purpose of these regulations. What do you mean by a social enterprise? Social enterprise means a company which has activities specified under this regulation. We will see what all activities: eradicating hunger. They have given you 17 list of 17 items. Next, not for profit organization. Very, very simple. This could be a Section 8 company, this could be a trust, this could be a charitable society. Okay, Section 8 company, all of this is covered. Now, social auditors. What do you mean by the term social auditors? Very simple. Social auditor means what? Any company will come and say that I am an NGO, I am doing a lot of charitable work. There has to be independent audit whether you are doing the the activities or no. So means an individual either registered under the ICAI or got a certificate qualified to conduct this kind of audit by the NISM. So he is a social auditor who has got a valid certificate to do audits on companies to check whether they are doing the social activity or no. Likely, similarly, you can also have social audit firms which will audit companies to see whether their social activities, their welfare activities are as per the regulation or no. Okay, social enterprise means either a not-for-profit company or a profit company which meets the eligibility. Okay, we'll see what is the eligibility. We'll go through the entire regulation also. Now, what do you mean by social stock exchange? So, as per the regulation, a social stock exchange means a separate segment of the recognized stock exchange having a nationwide terminals to register not-for-profit organizations to list their securities and have raised funds. So, a social stock exchange means a separate segment on the recognized stock exchange having a nationwide terminals to register NGOs and list their securities. Now coming to the applicability of the chapter. Right now I just want you all to understand the entire regulation. Slowly you will understand more and more points, and towards the end the entire concept will be crystal clear to you. First, now coming to the next part, regulation number 292B of the ICDR 2018. It says that the provisions of this chapter shall apply to, provisions of chapter 10A shall apply to NGOs as well as profit companies who have a social intent. So not-for-profit company, not-for-profit company. So this is applicable to not-for-profit companies, as well as these regulations are applicable for profit social enterprise. Now understand, all profit making companies won't come here. Only profit making companies which have some social contribution and have met the eligibility criteria of doing the social activity, we will see what is there, they will be covered in these regulations. So not for profit companies who are seeking only to get registered and not raise funds, even for them it will be there. Maybe if I have an NGO, I can just myself get a certificate, recognition that yes, I have certified, so I can help me raise funds. Second, I can also, this is the main one, where you can seek to get registered and raise funds. So imagine you can even raise funds to these social stock exchanges. That's the main intent, right? To get listed, give an offer document, tell the people that I'm raising money to eradicate this illness, to help the development, this will be the project plan. So I'm raising funds. So NGO have got a good route to raise funds to meet their objectives. And profit making companies who want to be identified as a social enterprise. So what is the purpose of a social profit making company to get recognition? The entire objective is only to get identified. They can't raise funds under this and they can't be listed. They can only be identified. This certification, they can use it wherever they want for goodwill, or for raising further funds, etc., but not on this platform. Next, access to the social stock exchange. Can you raise funds? Quickly tell me. Can you raise? Can you be an investor in something which is listed on the social stock exchange? Answer is no. So a social stock exchange shall be accessible only to institutional investors and non-institutional investors, not for retail investors. Very, very important. So investors will only be institution, that is artificial person. When I talk of a retail individual investor, means what? You and me, individuals, natural persons. Artificial persons are allowed to be investors here. Second, now what SEBI has said that listen, this concept of raising funds and having these NGOs is very, very organized sector. It's a very large scale business, a large scale activity. So let's have a governing council as well. Every social stock exchange shall constitute a social stock exchange governing council to have a oversight of its functioning. So they will give some rules, regulations, monitoring will be done. The composition and terms of the reference of such governing shall be specified by the board. So what all matters will be going to the council will be declared. Now coming to the most important part, most important part of this particular regulation, that is your regulation number 292E. Is the eligibility conditions to be identified as a social enterprise. Now I told you there are profit making companies also and not for profit companies also. So a profit making company and a not for profit company, okay, they would also want to get an identification that identify me as a social enterprise, so they can also be identified. One is identification can be done even to get listed, and identification can be given just for the sake of it, but I don't want to get listed or raise funds. Now whom identification will be given? So pay attention. A not-for-profit organization or a profit social enterprise may establish to be identified as a social enterprise has to establish primacy of its social intent. So they will have to establish primacy of its social intent. Meaning, I will have to show that I have social intent. I will have to show that I have done XYZ activities for the benefit of society, etc. Let's see. Further, in order to establish the primacy of its social intent, in order to show the premise, the base, the proof of my social intent, they have to meet the following eligibility criteria. Now, what is the eligibility criteria? The social enterprise shall be indulged in at least one of the following activities. Very, very important. If you see, there are around 17 out of any of these 17 activities. If a particular organization is involved in this, they can be recognized as a social enterprise. Eradicating hunger, poverty, malnutrition, inequality. Promoting of healthcare, mental health care, making available safe drinking water, promoting education, employability, livelihoods, LGBT community, environment, climate change, deforestation, protection of natural heritage. Okay. Then if you go to see promoting of rural sports, Paralympics, supporting incubators of social enterprises, that is incubators are giving facilities to companies which are working for benefit of society. Then if you see promoting the livelihoods of rural and urban poor, slum area development, financial inclusion, trying to get in very poor people also from opening bank accounts, participating in the financial sector, disaster management, access to land and property access of disadvantaged communities. So generally untouchability or anything, fighting, combating them. Bridging the digital divide. Now we know that in the rural sector they are not getting access. There are some areas where do not have power or internet. So to reach out to them, promoting welfare of migrants, those migrant workers who are there, to promote them. So if any organization is doing any one of these activities, it will be treated as a social enterprise. The social enterprise shall target. Now the social enterprise which is there, they will have to target. Now when I say target means what? What will be their target? Will it be to work for the benefit of the rich, to make them richer? The privileged community, the unprivileged? Obviously the social enterprise will target to help the underserved who don't get benefits, the less privileged population, the less privileged regions recording low performance. So some areas where we know that these are villages, they are not proper education. So they will be called as the target audience, the beneficiaries. Any social enterprise having 67% of its activities to the targeted population will be considered as a social enterprise. Imagine, what is the first step? The first step is creating your target area or audience. The target area. The target area could be a poor group, could be a poor area, could be a backward area. Once you decide the targeted area, then after identification, the NGO will have to invest at least 60% of its income to uplift or to benefit this particular region. So its expenditure, so they will have to spend 60% of its income to the uplifting this target area. So the social enterprise shall have at least 60% of its activities. So activities also 60% of that should be for the targeted area. So we have certain institutions which are known LGBT NGO. We can be a climate change NGO. We can have a NGO for welfare of animals. So we know that it's a very identified NGO working for this identified problem that they are trying to solve. So you can remember till here, where at least 67 of the immediately 3 years average expenditure has been incurred for providing activities to the members of the target population. So a completely new organization, NGO, will not get this particular certification. In the past 3 years, they will have to prove that they are already helping the target audience or the area. Now another thing is companies, political parties, religious organizations who have already a corporate background, corporate influenced, they shall not be eligible to be identified as a social enterprise. So for example, if we have the Reliance Foundation, or we have a political foundation or a religious organization, shall not be eligible to be identified as a social enterprise. It should be independent. It should be the company and all of that should not be there. They should be raising money from public, they should be raising from corporates, everything, but not dedicated to one particular foundation. Okay, so such corporates or such political organization, religious organization, dedicated corporate organization cannot be treated as a social enterprise. They will not get the benefits here. We want a actual dedicated NGO which doesn't have any identified or sole backing. They could be raising from public at large. So then we realize, okay, they are genuine without any raising any eyebrows. Now remember, except if it is for affordable housing. So if it is affordable housing, building of slums, huts, all of that can be allowed. So remember, these criteria is important. Next is requirement for registration for a non-profit organization. requirements relating to registration of a non-profit organization. Very, very simple. If my NGO wants to get recognized and listed to raise funds, so what it is there? A not-for-profit organization has to mandatorily seek registration with the social stock exchange if it wants to raise funds. If a social enterprise wants to raise funds, they have to raise funds from the social stock exchange, then listing is mandatory. Listing is mandatory. Common sense, only if you get listed you will raise money. But what if I don't want to raise funds? Then is listing mandatory? Answer is no. So provided a non-profit organization may choose to register, not get listed. If they are not listed, they will not even be allowed to raise funds. But you can still get registered. The minimum criteria for registration has been provided, which we will see. Now coming to the next one, fundraising by social enterprises. Now what is fundraising by social enterprises? A social enterprise may raise funds through the following means. Now very important, a social enterprise is an enterprise which is meeting all the criteria, which is doing those any of the 17 activities, eradicating hunger, healthcare, all of those that we saw, climate change, disaster relief, healthcare, rural development, all of that, to bridge the gap between digital, the digital gap in India. All of that, if you do any of those activities, you are a social enterprise. Now, social enterprise may raise funds to the following means. Now, remember, a social enterprise can raise funds through two means, point A and point B. What does point A say? Point A talks about not-for-profit companies, how they can raise funds. And point B talks about profit-making enterprises, how they can raise funds. I told you very clearly that a profit social enterprise cannot raise funds through the social stock exchange. Then how they will raise funds, I will tell you in short time. But this social stock exchanges is mainly for NGOs. So that is very simple. Let's read that. A not-for-profit. So this is very simple, easy. Let's understand and quickly finish. This is the most important. A not-for-profit organization may raise funds on a social stock exchange through zero coupon, zero principal instruments, and that too from institutional or non-institutional investors, but not retail investors. Second, through donations from mutual fund schemes or any other scheme that may be prescribed. So this is very, very important. You can make a note of it. Now coming to profit-making enterprises, what if they want to raise funds? How do they go ahead and do that? So a profit social enterprise may raise funds through the SME platform, NSE platform, BSE platform, or AIF regulations. Right? AIF regulations, when they are there is the AIF category 1 is also social funds. So they can go ahead in that normal scheme which is already prevalent. So issue of equity shares on the main board. So you raise the equity shares money and use it for social purpose. You can do that. Tata does that. So Tata's has issued equity shares, raise funds, and from that funds they have some charitable institution, charitable schools, charitable cultural centers, etc. Or they can go on the SME platform, innovators growth platform, AIF regulations through social impact funds, but not the social stock exchange. So all of that they are saying go on the other platforms which are already in existence, SME, NSE, IGP, AIF, from there you raised. Okay, through issue of debt securities or any other means. So I hope this is perfectly clear. Now coming ineligibility to raise fund. Now this is also very simple and easy to understand. Who cannot raise funds? Okay, ineligibility of raising funds. Very simple. If you go to see who is not allowed to raise funds or get listed, any if the promoters are debarred or they are working in a debarred company, we will see, or they are fugitive offenders or they have defaulted on a loan. So all of that will come. So very general, we can read and complete it. So let's see. A social enterprise shall not be eligible to register or raise funds through a social stock exchange if any of its promoters are debarred from accessing the stock market. So if the promoters are debarred from accessing the stock market, they cannot raise funds. Second, if the promoter of the company is not debarred, but the promoter of the company is also a promoter or common promoter of another company which is debarred, so this company will also get debarred. So if any of the promoters is a promoter of any other company, so there is a common promoter, Mr. A is promoter of company X and company Y. Company Y has been debarred, so he is a promoter here. So in whichever company is a promoter, he will also be, that company will also get debarred. So if any of the promoters is a promoter of any other company which has been debarred, so even now company X will not be able to raise funds because they have one promoter who has been debarred in who is a promoter of another company which is debarred. Who is a willful defaulter or a fraudulent borrower is a fugitive economic offender or has been debarred by the Ministry of Home Affairs. Now I told you, in any of these cases, the instrument that is issued here is called as a zero coupon, zero principal instrument. Very, very important. That means if there is an investor, they will not get interest, they will not even get their principal amount. Simply saying zero coupon, zero principal instrument. So shall be issued only by a non-profit organization. A zero coupon, zero principal shall be issued without any coupon, no principal, and shall be payable on its maturity. Now coming to the eligibility for issuance of zero coupon instruments. So a social enterprise which is a not-for-profit registered may make issue of a zero coupon, zero principal instrument. So very clearly, can a profit organization which has been recognized as a social enterprise, can they issue zero coupon, zero principal instruments? Yes or no? What is it? Can a social enterprise, a profit making social enterprise, issue zero coupon, zero principal instruments? Answer is no. It is only a not-for-profit company which has been recognized as a social enterprise can issue these instruments and then list them on the social stock exchange. So the chapter 10 is mainly for NGOs who have been recognized as a social enterprise to get listed and raise funds. A not-for-profit organization may issue zero coupon, zero principal instruments only for a specific project. So they can have a specific project, setting up of a school or a dedicated project for paying up the expenditure of XYZ illness of XYZ patient, all of that. Now procedure for public issuance of zero coupon, zero principal instruments, very, very important. So what is the procedure? Very simple. You will have to make a draft, the draft prospectus. The draft prospectus will contain how much funds are you asking. It will cover the purpose. It will cover for how much tenure the purpose will go on, etc. And this will be given, this offer document will be given first. The draft offer document will be checked by the social stock exchange. If they have given any changes, you will have to make those changes and then launch it to the investors. So a not-for-profit organization shall file. So only a NGO shall file a draft fund raising documents with the social stock exchange. A profit organization cannot raise funds, cannot issue zero coupon, zero. So the question of listing does not come there. It's only an NGO who falls in this category. The draft fund shall made available on the website of the social stock exchange. The fundraising document shall be available to all the investors, and it will be kept on their website. The not-for-profit organization shall incorporate the observations received. So there could be observations by the social stock exchange. You need to get those observations, those changes done. Now if you want, this is called as public issue. You can go and raise it to the masses. However, if you want, you can even issue it to identified persons, like a private placement. So private placement can also be done if the company has already identified an investor, if the NGO has already identified an investor, they can have this agreement and stock exchange and enter them. And rest all provisions will have to be followed mutatis mutandis, that is similar when there are the necessary changes. So the not-for-profit organization may also make private issuance of this as per the AIF regulations. So AIF regulations is where these high tech investors, these HNIs, high net worth investors want to make an investment. Contents of the fundraising documents. So all the contents will have to be given which will be true and fair and gives enough information to take the necessary information, necessary steps. Now, though we are on the end, almost end, but now we come to the most important part of the regulation, and this has a likelihood to come in the exam. Most important, the conditions relating to issuance of the zero coupon, zero principal instruments. Let's see. First, you can take a note of it. The issuance will be in demat form. The minimum application size is 1 CR. Imagine, the minimum issue size is 1 CR. So if there is any social enterprise which is planning to raise funds, the issue size should be minimum 1 crore. So the issue size will be minimum 1 crore. Clear? Second, now if there is an investor who wants to invest, they will also have to make a minimum application size of 2 lakh rupees. So the minimum application size will be of rupees 2 lakh. So if there is an investor, that investor cannot invest 1 lakh rupees, minimum 2 lakhs. The minimum subscription, normally can you tell me in public issues what is the minimum subscription? It is 90%, but here relaxation has been given. The minimum subscription is 75%. Okay, if 75% is not achieved, refund will have to be given to everyone. Why? Because as it is they don't want, but why should you give a refund? The reason is very simple. I have raised for X project. Now if I don't have enough funds, I will not be able to execute the project. So therefore it is better to refund the amount. In case of any under subscription, you have to provide details. First, how do you plan to raise the money? If the money is raised between 75% to 100%. So let's take off a category. We know that the minimum subscription is 75%. But what if I got 80%? So 20% is deficit. So I will have to tell that how do I plan to raise the balance amount in case if the subscription is between 75% to 100%. Next, what is the possible impact on the social objective in case of under subscription is not arranged? So you will also have to say that what if the under subscription cannot be done and we are still standing at 80% of the project cost, issue size, then how will it impact the social objective? Common sense, if I raise the funds, I raise let's say 10 crores, I plan to raise 10 crores. I didn't get 10 crores, I got only 7 crores. So now the question is, what is to be done? If it is below 75%, refund. If it is less than 75%, it will be refunded. But what if I got 8 crores, 80%? So they will have to say that whether I can execute between if 75 to 100, I will be able to implement the project or no. So all those details will have to be given. Next, a social stock exchange shall maintain the details of its zero coupon, zero principal instruments. Okay, it will be deemed compliance with the SCRA regulations, rule 19 of the SCRA rules. So again, minimum subscription and minimum public offering, all of that, it will be deemed that you have complied if you are complying with these regulations. So the strict responsibility of maintaining minimum public shareholding will not apply. Here it is saying that it is deemed to be applicable. Next is the termination of the listing of the instruments. When do they terminate? So obviously either the objective achieved or the tenure is over. If the object is achieved or the tenure is over, we will say that this particular instrument will now be terminated in the following cases. Obviously, once the purpose is over, then these instruments will be closed down because the money would have been utilized. Clear? So that is it with this particular chapter 10A, that is your social enterprises. Okay, so I have covered the entire chapter 10A in detail. There cannot be any question which is in excess of this particular part. What all you need to remember is the eligibility. So 17 aspects you are eligible. Non-eligibility, promoter is a defaulter, fugitive, they have not paid the money. Third, what are the conditions? So 1 crore minimum issue size, minimum subscription 75%, minimum application size they have given you 2 lakh rupees. So these are the important parts. So I have covered the ICDR regulation 2018 completely in detail. You can watch my entire marathon which is there and under the CS professional playlist. With that, this addition part you can add it up. And that is it. We are done with the entire part and the entire corporate funding amendments. There are few more parts which I will share it. Go ahead, join the entire join our WhatsApp and Telegram group specifically for CS professional. There's a lot of more coming up which like your scanners, etc., which I will be providing. Any doubt that you have, yes, I will be sharing this in the groups. So go ahead and join. Is it important to remember those points for social enterprises? From this part, everything you do it, nothing will come beyond that. And Mihir, most welcome, my pleasure. Thank you so much, guys. Do share this with your friend. And tomorrow, most important regulation will again be simplified for you. That is your non-convertible regulations. Okay, it has a weightage of 15 marks in your exam. Go ahead and check the schedule. So with this, I am done. Don't forget to like the video, subscribe if you're new to the channel, and share it with your friends. Thank you. I see you all tomorrow. Take care, guys. Thank you.